at some business news on the programme now, joined by Brian Quint. He's here on set. Going to start with that story. First mentioned this yesterday, didn't this major gas field development deal between Iran and the French energy giant Total?
Yes, that €4.2 billion contract to develop the world's largest gas field in the Persian Gulf is Iran's first major deal with a foreign oil company in more than a decade. Foreign direct investment has been rising in the Islamic Republic since the European Union lifted sanctions in early 2016 in sectors like energy, transport, and aviation. Iran is hoping that trend continues, but there are major risks for foreign firms, especially as U.S. sanctions remain in place. Clément Bonnereau reports.
Total is the first Western energy giant to return to Iran after sanctions were eased last year. The company's CEO, Patrick Pouyanné, said he expects other companies to follow suit.
What I hope is that this agreement between a big European French company and Iran is going to encourage other companies to come to Iran. Because I think economic development is also a way to bring peace. Our companies are there to build bridges, not walls.
Other energy companies are yet to tap into the Islamic Republic, which has the world's second largest gas reserves and fourth largest oil reserves. Royal Dutch Shell and Italy's Eni have so far only signed provisional agreements with Tehran. Major global companies have invested in other sectors. Boeing and Airbus have reached agreements to sell a combined 180 aircraft to Iran. And French carmaker PSA has committed €300 million to make Citroëns in the country. Iranian authorities hope these deals will pave the way for even more. The Islamic Republic received €3 billion in foreign direct investment in 2016, a 64% increase from the previous year. Many companies, however, have been reluctant to invest in the country, citing continued risks as well as uncertainty regarding the fate of the nuclear deal. Investors also face complex rules on doing business, as well as banking restrictions, making it harder for companies to move money in and out of Iran.
Now, the German Chancellor Angela Merkel, as we've seen, standing for a fourth term this fall. A busy international agenda for her, especially this summer, but also some ambitious domestic plans for the German economy.
Well, Merkel and her Conservative Party, the Christian Democratic Union, looking to stay in the leadership of Europe's most successful economy. She's pledging tax cuts across the full spectrum of German society, a maintaining of the government's budget surpluses, and increased public investment. The job market in Germany is in particularly good shape. Since Merkel took office in 2005, unemployment in the country has been cut in half to just 5.5%, but she wants to go even further. Let's take a listen.
Now in 2017, we have succeeded in cutting unemployment by half. And now we want to slash the jobless rate to 3% by 2025. This is called full employment.
Angela Merkel there. What about the markets? How are they looking?
Well, European markets pulling back from yesterday's solid gains. All major indexes down around 0.5% at the open as international tensions breeding caution. Oil prices pulling back as well after 8 straight days of gains. That's weighing on the market a bit. Major Asian indexes trading lower on Tuesday. Investors rattled after North Korea's most recent missile launch. Shares in Japanese automakers rising as Toyota and Nissan report sales growth despite a fall in U.S. car purchases wasn't enough to keep the Nikkei from closing in the red. Hong Kong's Hang Seng index down over 1.5%. Korea's Kospi index losing ground as well, with Korean automakers hit by those falling U.S. sales. Well, let's take a look at some more of today's business headlines. An apparent computer glitch on the NASDAQ exchange caused a number of stocks to list incorrect prices Monday evening. All affected companies showed the price of $123.47. That's an 87% drop for Amazon, but a 250% jump for eBay. NASDAQ said no trades had been completed at the incorrect prices. It blamed the glitch on improper use of test data. Samsung says it plans to invest nearly $19 billion in South Korea. The company is looking to strengthen its lead in the markets for memory chips and smartphone displays. The investment will go towards new flash memory production lines as a persistent shortage lifts digital storage prices. Memory chip makers like Samsung are expected to record record profits for 2017. And Subway plans to open 500 new locations in the UK and Ireland by 2020. The sandwich shop franchise says 5,000 jobs should be created by the new stores as the market for cheap takeout grows in the UK. Britain's takeout market is projected to reach £22 billion by 2021.
Here's a story to warm your heart, a costly ethical dilemma for one UK farmer.
His name is Jay Wilde. In 2011, he inherited his father's beef farm in central England. The problem, Wilde is an animal lover and a vegetarian, and he couldn't bear to send the animals he spent years raising off to slaughter.
Oh.
Finally, this year, he had enough. He donated his entire herd of 63 cattle to an animal sanctuary where they'll live out the rest of their natural lives as pets. Wilde is taking a loss of around £45,000 on the herd. He said it's worth it for the peace of mind and that his farm will now turn to growing organic vegetables.
Oh, 45,000. Presumably he's not paying for their feed as well then.
No, I don't think so. That sounds expensive, yes.
Very impressive. Well done to him. What was his name? Jay Wilde.
Jay Wilde.
Thank you, Brian.
Nice guy.